Hello, everybody. This is Alden Guajardo with Mobile Mailbox Money, Silvercrest Opportunity Fund, and Win Mobile Homes. Welcome back to the Family Bank here in a Warren Buffett investment strategy, providing a solution in a time when it's needed most. Here today, we'll go over some deal flow, talk about our week, as well as explore why this is an opportunity given the current financial market. I've got some of my team here today. I've got Sonny Finkel. Sonny, maybe if you could just introduce yourself for the viewers that don't know you.
Hi there, I'm Sonny Finkel, and I am the Investor Relations Specialist for Mobile Mailbox Money and Silvercrest Opportunity Fund. I am also the Loan Compliance Coordinator for Win Mobile Homes, and I help usher these transactions to the closing table to create the notes that you all invest in. So feel free to ask me any questions or give me a call or a text or email if you need some help.
We are streaming live on Facebook, YouTube, and LinkedIn, getting some interaction. People love you, Sonny. It looks like so even more now so that I even said something. Just know you could go back and view these previous masterminds. You know, we've gone over probably $5-10 million in seller finance notes over the past 6, 8, 9 months. Recently, we received a $500,000 capital investment in the fund, adding to our positions. That was 27. That will likely go to 37 or just shy of that. So, you know, just adding to the portfolio. I know a lot of people here join in the want to deploy and capitalize on their relationships, which means using other people's money to navigate and acquire a position, offering them a satisfactory return, but also arbitraging an interest rate, creating perpetual returns with none of your own money. And that's called hypothecation. You know, we have a wide variety of investors that join these calls, from people with their own money, people with directed IRA money, or solo 401ks, or really just leveraging personal relationships, or maybe you're a fund here today. You know, all areas of opportunity. I'm going to just start the meeting off here with a little video that kind of goes into and describes the story of hypothecation and how you can use other people's money to buy notes that we'll even go over here today.
I was sitting across from a man who had worked at the same job for 22 years, done everything right, saved carefully, invested conservatively, and he looked at me and said, "I feel like I am running out of time." He was not broke. He was trapped in the gap between what his capital earned and what his life actually cost. That gap has a name: the spread. And the people who understand the spread do not work for money. They architect it. Here is how it works. You sell or finance a home. You set the rate. You control the terms. You originate the note. You become the bank. That note is now a performing asset, a payment stream, monthly, fixed, collateralized. Now you hypothecate it, pledge it to a capital partner. They receive a bank quality return, structured, secured, documented. You keep the spread between what the note yields and what you pay them. 2 to 6%. On capital that was never yours to begin with. That is interest arbitrage. That is other people's money generating perpetual returns inside a structure you built. I went back to that man and explained this. He leaned forward and said, "So the note pays you while you sleep. Your capital partner gets their return, and you keep the difference." I said, "Every single month." He was quiet for a long time. Then he said, "I spent 22 years selling my time. This thing sells money." That is the realization. You are not arbitraging capital. You are arbitraging time. The note works. The spread compounds. The system runs. And you get back the one thing the job was always costing you: your life. Mobile Mailbox Money is where you learn how to build this. Silvercrest is where accredited investors step into a qualified operator's existing platform. Bank quality returns. Real collateral, already working. You do not need to build what took me years to build. You just need to step into the right position and let the spread do what it was always designed to do: work while you live.
So this is quite literally a time travel strategy at the end of the day, teaching you to collect future payments today given the current financial market, outside of complications and landlord and tenant strategies, with no maintenance, management, insurance, and taxes. We're literally making money being the bank and acquiring compliant positions, performing collateralized at a double-digit interest rate. Really tough to find outside of these meetings, even here today. So good afternoon, everyone. Thank you for being here today. What I'm about to walk you through is not a concept, not a pitch, not a theory about what could work. This is a platform already in motion right now in the state of Arizona. And by the time we finish today, you're going to understand exactly why first lien private credit backed by affordable manufactured housing is one of the most compelling investment positions available to accredited investors through the fund. Let me start with the foundation. Most investors are looking at the same crowded asset classes: equities dependent on market sentiment, rental properties dependent on tenant behavior, savings accounts losing ground to inflation every single month. We built something different, a repeatable private credit platform built around one truth that has never changed regardless of what the market does. People need affordable housing, not luxury housing, not appreciation plays, affordable housing where real families live real lives and make real payments every single month. That monthly contractual payment secured by a first lien position against a real asset is the most resilient income in the American economy. Here's how the platform works before we hop into some of these deals today. We operate a full capital cycle: construction credit into stabilization, into note origination, into long-term contractual cash flow. We source affordable manufactured homes across Arizona communities. We sell or finance those transactions, and we originate the note holding the first lien position. The family gets their home, the payment begins, and the income flows monthly, fixed, contractual, and collateralized. No tenants to manage, no maintenance to schedule, no market timing required, just a first lien in a home where a family is already living and already paying. Today, I'm going to walk you through our active positions and pipeline in detail. You're going to see the collateral, you're going to understand the terms, and you're going to see exactly how each transaction is structured and why it represents the kind of a position that a properly capitalized investor should want to be in. Our current portfolio represents approximately, being debuted today, this is our weeks of positions at $680,000 in active positions, generating approximately $7,000 per month in projected contractual borrower payments. And beyond the pipeline, Silvercrest maintains approximately $1 million in performance seasoned notes available for direct acquisition at the unpaid principal balance plus $1,000. For it being performing, you buy a now seasoned potential partial portfolio of performing notes, making the full yield for people out there raising capital. And that's kind of a first offer that we've had on our meetings. This is institutional private credit built around real necessity, senior secured, first in line, and last to take a loss. Most investors buy real estate. We create and control the paper. So let me show you exactly what that looks like today. We're at the family bank in the live deal flow market. Let's check out some deals and what we have coming down the pipeline, about $680,000 worth. So let me orient my screen here. So this is lot 330. I know the buyer borrower is having challenge getting their their tax returns, but they are still super interested in buying the property. So we're navigating that as they go through underwriting, but it is a serious buyer. They have the property that they want. They've walked the house. Their last step for the application is a tax document to facilitate their ability to repay and verification of income. Long story short, this home is potentially coming available on a first lien seller finance note, lot 330. Lot 330. They are paying $99,500, I think it is, or it was $99,000. Their unpaid balance is $95,000. So an unpaid balance of $95,000 on a 20-year term, paying $1,181.34 a month. So if you have a mortgage calculator, you can kind of reverse engineer what a return on investment would look like. You can go download Carl's mortgage calculator pretty quickly on the App Store for free. This property is located off major cross streets of Country Club and McKellips in that northwest Mesa market in a family community. This is a year 2018, 3-bed, 2-bath. This buyer borrower's total monthly payment, they have an unpaid balance of $95,000. Let me just run through this real quick. $95,000 they're carrying, with lot rent is $2,150. So with the home payment, the lot rent at really what market rent is in the area, $2,150 for a 3-bedroom in the Northwest Mesa market. They match or beat market rent. Long story short, the home payment is $1,181.34, and the lot rent is about $950. So those two combined get their total monthly payment. And if that matches or beats market rent, what are their alternatives for housing at the end of the day? This meeting is a very interesting one because we did receive a $500,000 investment on Friday. So likely all of these notes are going to get absorbed unless an individual ends up speaking up today on this meeting. So if you have interest in a position, or really you're pretty close but pending due diligence, you want to see more, please don't hesitate to reach out. Today's a first come, first served situation. Not always the case. We do play preference with the fund as it's an in-house equation, but just know time is of the essence, and we're getting some interaction there. Thank you so much for your interaction today. Remember, Sonny is in the chat. So if you have a case-specific question or a burning desire, or really you want to take down an acquisition today, message in the chat. Don't hesitate to do so. Sonny's very knowledgeable, and I'd love, Sonny, if someone does ask a question that's great to talk about, let's please talk about that aloud. But let's continue on down the road here. That was lot 330 at $95,000, paying $1,181 a month. Here's lot 41. This is our pre-rehab photos. Let's just walk through this real quick. So we bought this as a 2-bed, 1-bath in this current condition, classic older manufactured home, 2-bed, 1-bath, needed new siding, new windows, new really everything. So we took this property down to the studs and ended up remanufacturing it virtually into a 3-bed, 2-bath. Let's take a look at the finished photos here and talk about the exit. So that home, I think we bought for $3,000 to $5,000 ballpark. We got 3 months free of lot rent. We bought it, rehabbed it, and resold it now. Our construction and carry cost was like $50,000, probably another $10,000 on top of that for closing. So we had about $60,000 into remanufacturing this unit, turning it into a 3-bed, 2-bath. It's currently pending right now
at $99,000 with $2,000 in earnest money and a total down payment of $5,000. The loan amount is $94,000 and the payment is $1,237.78.
So the new drywall, new electrical, new plumbing, new siding, new kitchen. I mean, look at this kitchen. A brand new property like this, given the square footage, we beat replacement costs 100% of the time. This would be 125, 130 with more square footage, like 150, 160, especially in this family style community. Sonny, you're helping process this transaction?
Yes, this house also got an updated roof today.
We did seal the roof. Why? Because the insurance actually asked, hey, when's the last time you had it sealed? I didn't know the answer to that, so I just went and resealed it at the end of the day. But that's a great thing to bring up, because every property that we sell or finance has an insurance policy. It's required to have insurance. Sonny, why is that so important as a lender?
The guarantee on the roof coating is 20 years, and that's the amount of the time of the note. So it's a good insurance policy in and of itself on the life of the roof for the investor to know that it's guaranteed that long. But also the protection of the investor. We list the investor as the loss payee on the insurance policy once the notes are funded, and that way they're covered by the homeowner policy.
So God forbid this house burns down. I bought the note and it's been 6 months or a year or 5 years and this property burns down. Do you mean my capital is covered because of the required insurance policy?
It is. And we also have the borrowers pay for the policy a year in advance just to make sure that they get through at least the first year with it being completely taken care of. And then they can choose to pay it in full again the following year, or they can escrow it with their payment.
So good quality collateral, secure, risk mitigated transactions. Sonny, what are the benchmarks this individual had to go through to get financing, to go through seller finance?
They have to be free of any evictions, felony convictions. They can't have any kind of charge-offs on their credit that has any relation to a home, not a charge-off for a power bill or a lot rent at another park or anything like that. No charge-offs in relation to anything home involved. They have to have a minimum debt to income ratio of 45%. They have to net at least double of what their payment is completely in income. What am I forgetting?
All really important benchmarks. That means what? Ability to repay, correct?
Correct.
So they have a licensed mortgage officer, a third-party underwriter. You know, most people see the platform and think, oh, this guy just went down, sat down at the table and signed a napkin with the individual to do this transaction. No, this is a real bank quality structure that we go through in order to make sure our capital is treated like it's our own. At the end of the day, I'm not going to do a deal or bring this to the platform unless I feel confident that its rate of success is a satisfactory, risk mitigated, safe, secure capital investment at the end of the day. So that's lot 41, 94,000, I think 1168.91 a month. And these are all estimated, just so you are aware. At the end of the day, it's not done until it's in writing, but we get real close. So just
that one has the higher rate, so it's 1237.78.
1237.78. So that's a really choice position to say the least. Let's continue here. We have lot 17 off major cross streets of Vista and Broadway in a gated 55 and older community. Kind of switch gears here. We've talked about a few homes in parks that were all family parks. This is a 55 and older unit. Sonny, are you handling this transaction with?
I am. The sale amount is $49,500. The earnest is $2,000 and the down payment is $5,000. The loan amount is $44,500, which will be the note amount, and the payment on that is $553.37
for a 20-year term. Every
Correct.
note that we talk about is a 20-year term because it's newly originated, right? At the end of the day, Sonny, if someone didn't want a 20-year term and maybe they wanted this same collateral performing nature, what do we do in that position? What is that called?
We would take any lower than 20-year term for sure. And we have taken a 25 or even 30-year position at the request of a borrower within the agreement by the investor. The other thing that I thought was really interesting about this property is that the property taxes for the year are only $21.10.
That'll likely get reassociated sometime in the future, I'm sure. But, you know, personal property tax is a great thing to talk about because you're not subject to rising appreciation challenges of having a new assessment and having another 10% increase in your taxes at the end of the day. It's personal property. It's not attached to the land. It's more permanent than not at the end of the day. But to know that that's not a factor is great to talk about. Hypothecation is what I was trying to get to, is on this same note, and say you didn't want a 20-year term on a transaction like this, where you're like, hey, I like the deal. I like the structure. I'm wanting a first lien collateral, you know, two potential caveats. I can give you 19 years of liquidity, which means I give you a 1-year term, and say you are non-accredited at 44.5. I pledge this same note via hypothecation at its unpaid balance, which is 44.5 times my proposed rate of return divided by 12 is 370.83 a month. So not only do you take a position at the top of the capital stack, you also hitch your cart to a qualified operator who gives you 19 years of liquidity, still a double-digit interest rate, but a 1-year annualized double-digit return on investment. And in a year from now, say, hey, Sonny, congratulations, you've received your payments. Would you like to auto rollover because we're still performing, or would you like to cash out at the end of the day? And how do I provide liquidity to that transaction? Well, I bring that same performing gold out in the market to these meetings, to people such as yourselves, redistribute, resell, re-leverage, as long as the home's still performing. If someone buys this whole note and owns it within their portfolio, say you're a hedge fund, you are using hypothecation to leverage other people's money, Sonny, what are the bells and whistles that come with the potential non-performance? Listen, there is risk in investment, but if someone does buy a note from Mobile Mailbox Money and it does go non-performing, what happens in that situation, Sonny?
Well, if you buy a construction note, then Win is your borrower and there is no chance of default because we guarantee the payments. The same with the 1-year term that you were just discussing. Again, Win would be your borrower and we would guarantee your payments. But we do have boots on the ground in all of these communities, and we do assist every way that we possibly can to help get in touch with a borrower who is non-performing. We have the ability, with the investor's permission, to put a payment on the back end, on the back end of the note to try to help somebody catch up. Or, we have the ability to assist in removing a default borrower and replacing them with another one.
So, a lot
It's
of
not our first choice, but life happens sometimes.
That's stuff we don't obviously market, loan modifications and savvy ways to work a loan out at the end of the day. We want the performing payment. I don't want to own the house. I want the payment. I want the payment and what we agreed on at the end of the day. And if that doesn't work out, there's ways to mitigate a potential non-performance, loan modification. But if it does, the buyer borrower puts their head in the ground and does need to ultimately get repossessed, we provide a service at cost to our investors who ultimately buy a note 100% within their portfolio. Sonny, what does that mean specifically? How long does that take? And really, what are kind of some associated costs?
We have an attorney that you wouldn't have to go out and pay a $5,000 or $10,000 retainer to start from scratch with somebody. We have an attorney that we use that we would pass on the cost to you. I think it's somewhere around $750, something like that. I don't remember exactly the cost, but we share that relationship with you, as we share many of our relationships with you that you don't have to establish on your own. We do have the ability to have people in the communities to knock on the door, to get in touch with the borrower, to find out where they are, what's going on, why they're behind. I have been licensed in the state before as a loan modification, to do loan modifications as a mortgage broker. So I'm able to help restructure some of the terms if necessary. If we do have to go the repossession route, it only takes between 30 and 45 days for the borrower to be in default, for us to perform a repossession and then recapture the asset to clean it up a little bit, whatever is necessary to reperform it back out into the market.
So it's considered a repossession It's literally a 30 to 40 day process. Listen, are we in the business of taking people's houses back? By no means necessary am I interested in any of that conversation, but it is a business. This is an investment at the end of the day, but we're cognizant of the situation. So if someone puts their head in the ground within 40 days of non-payment, we get title, a writ of restitution. The sheriff comes and does the lockout. They have, I think, 7 days after that to grab their stuff. And within 50 days, you've retitled the home, paid the $750, likely 2 months of backlot rents, about $1,000 a piece. That's $2,750. You know, maybe a move-in, move-out special for paint from one of our contractors that you get at cost. Call that $1,000. That's $3,750, and maybe a $4,000 commission. That's $7,000, and you've reseller financed that house, right, on potential non-performance of that risk coming to fruition of a note that you bought from us. We usher forward our bells and whistles. Within, say, 2 months, that property's now repainted, back on the market, or in escrow, reseller finance to a new end user, buyer, borrower. In that situation, it could be worth even more money at that time, depending on what the market's like. You know, sometimes in the summer, prices kind of dip off, and in the heyday, prices could go up $20,000 at the end of the day. So there is risk and investment, right? But to know the bells and whistles behind the potential of a non-performance is of utmost importance to get the whole, you know, kit and caboodle of what it looks like to be an investor in a note like this. Sonny, did I cut you off?
No, it's okay. They that's the super benefit to manufactured housing in this situation, because it's personal property or what's considered chattel. It is just a repossession as if it were a vehicle or something of that nature, instead of having to go through the entire foreclosure process that you'd have to go through with residential properties.
As well as, I don't know anyone else in the nation that lets you take our contacts. That may change one day, you know, but we do that out of the want for transparency and setting you up for success at the end of the day. You know, you can go buy a note from Joe in New York or whatever it may be, or, you know, in Wisconsin or Alabama, but are they going to stand behind that position and provide you the tools if and when a potential non-performance takes place? Listen, these are risk mitigated. You know, we go through underwriting and we do a tremendous amount of transactions, but if you do enough, there's a few that are bound to come to a risk coming to fruition. It's just the law of investment. And as long as you win more than you lose, at the end of the day, that's how a successful investment strategy comes to fruition. And with our
So what is the main reason why we do that? And I don't think we've ever really discussed this, but I would say, I don't know what the actual statistic is, but I think it's somewhere around 90 or 95% of every one of our investors are repeat customers.
Boom.
I can't think of very many investors that we have that have only bought one note.
Boom.
And never bought another one, or aren't currently looking for another one because it's successful and you want to do it some more. So we want to create those relationships. We want to share those vendors, those processes, that security, because we want you to continue to come back.
Sonny, you get a gold star for that comment. Let's continue our deal flow here. I know it feels like you may be drinking from a fire hose, but that's what free education is. You know, this is not a one-on-one structure. This is high-level capital investment, arbitraging other people's money to provide a solution in a time when it's needed most. At the end of the day, we're probably the largest operator in this capacity in the nation, and I would plant my flag saying so. You know, we do 5 to 10 transactions a month, and that number is growing with the help of each of you investors out here today. So we appreciate you being here today. Let's continue. This is lot 116. I bought from my relationships at Cal-Am Properties. They have 10 parks here in the Valley. This is in the South Phoenix market off the 10, I think it is, in Santa Estrella. Santa Estrella, lot 116.
So this property is under contract for $85,000. They put $2,000 down. They're actually putting $15,000 down payment. So the note amount is only $70,000, and it will pay $870.46 a month. And a lot of skin in the game on this one. So the likelihood of a default is very small.
Is this a small family or?
It is an individual.
Okay. Is he a first-time home buyer?
I believe so. He's from Mexico.
What's the average age of a first-time home buyer in the nation?
40.
45, I think it is. How old is this guy?
I don't have his ID right in front of me.
Is he like 30 or?
I'm not sure.
Long story short, this guy probably got a 20-year jump on owning a property because of this
it's an all-age park, so I'm guessing he's younger.
Because of this strategy and your capital investment, this individual gets a 20-year jump on life, on time, and potentially growing his roots here in Arizona. I mean, the emotional satisfaction I get of doing these transactions, just I'm so thankful to be put here, and have a feel-good investment strategy. Every note in every position and every door that we facilitate out in the market is quite literally another family being born, being cultivated, and being really helped, but also making an above average return while doing so. That's like a win-win-win situation at the end of the day. And to find that out in the current financial market is literally non-existent. You can't just go buy a single family property and cash flow it. You want to go buy a residential note and seller finance, the house. You want to buy a house and seller finance the home, single family that rates 8.96%. This is that corner of the market, given the current financial roller coaster that's going on for asset pricing, equities, rental rates and multifamily. This is it. Warren Buffett beat me to it. Got to give that man his flowers at the end of the day, but we're quite literally following in the footsteps of an institutional investment strategy. So this is lot 116. Sonny, just real quick, what was the unpaid balance? What was the payment?
The unpaid balance is $70,000 after $15,000 down, and the payment is $870.46.
$870.46. So immediately available, that home. Any questions in the chat? I'm going to just open it up lightly here, give you a moment to kind of have your time. This is all for you at the end of the day. This education's worth $40,000, $50,000, the kind of content and stuff that we talk about and just give out for free. So if you do have questions, we'll just air it out here real quick. This is as involved or uninvolved as you'd like. Education's great. Education is of utmost importance. You should always be learning, but if you never utilize the tools that you put within your tool belt, it's all for nothing at the end of the day. You got to take a movement forward. You got to make another contact and figure out how you're going to raise the capital to buy a position and take a leap of faith at the end of the day. This isn't for everyone. Wouldn't encourage that for a non-seasoned investor. This is for high-level strategists and people wanting an above-average return at the end of the day. So let's just kind of continue our deals and we'll wrap the meeting.
I want to throw in one more gem on that one, which we frequently do, and we are doing on this one, San Estrella 116. We like to do this a lot with first-time home buyers. We are providing a complimentary home warranty on this property for this borrower. So if they have any issues, they have the ability to utilize their warranty to make sure that they keep everything running properly. That's a $650 value that we provide to some of our borrowers within our negotiations.
So all these homes can actually be found on our website until they're sold. So we recently rechanged this price to $99,000 if they don't end up buying. So I think these are more turnkey photos. I could be wrong. But obviously, this is during rehab. I think we have some turnkey photos that will take obviously before the closing, but just kind of give you a little bit of idea. We definitely get them to a turnkey component. Sometimes we sell them before they're even turnkey at the end of the day, which is a blessing in itself, to say the least. That's lot 116. Here is lot 72. Lot 72 was an interesting equation. So let me just talk through what this deal is and how I came about it, and really why I'm even bringing it up. So I got a call from an individual that was looking to sell this house, this 2-bed, 2-bath in the Phoenix market. This is lot 72 in Blue Sky. Excuse me. The individual that owned this house had a private investor seller finance loan on the property. So he had a loan on the house, right? And ultimately was going behind. The property's value was not deemed sufficient to make a cash offer, but I ended up reverse engineering a return on investment, still having a margin within this transaction. That's a fancy way of saying I found the private investor with the note. I called him and told him, your note is non-performing. This transaction is going to be a bust. Let me buy your note at a negotiated discount and I'll let you go on your way at the end of the day. I think I bought it for $12,000, somewhere around there. The loan was like 27. So I bought the unpaid loan for like 12,000, and I seller financed the house back to the end user, ultimately at, I think it was like 30 or 40,000. So he got back into the property, re-cash flowed the house. And long story short, once a non-performance happens, it's a high likely that they may fall out again. So he did end up going non-performing again at the end of the day. I'd have formally ushered him out of the property. In the trade, in the exchange for non-seek of eviction, I had him sign the house back over to us in lieu of eviction, quit claim, if you want to call it, or really just relinquished the ownership to the lender, repossessed the unit in this condition. We had conducted a rehab on the property, and if I can get the right folder here.
It's currently under contract for $75,000 with $2,000 down. With $2,000 earnest and $5,000 down. So the unpaid balance or the note amount will be $70,000. And using my Carl's mortgage calculator, because I haven't finished the processing on this one yet, the payment is $870 a month, $870.46 a month for 20 years.
How many people think mobile homes depreciate?
Not me.
I sold this for profit 2 times, both at increased price points. Yes, we had to do some minor rehab, but 2 times on the same house. Now it's creating returns of $870.46 a month for a 20-year term. That's literally life-changing money. Sonny, how strong and interested is this borrower? I can't remember.
She seems very interested. We've just received the offer. What's the date on it? Just in the last day. So I don't have all the financials and everything yet to be able to tell you how strong is the borrower, but I will soon.
So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We have 15 investors. I don't think I've met any of you before. I'm sure you found us online. Greatly appreciative that you're here today, to say the least. We give you a back office view of what we do on a daily basis, and the want for transparency, trust, and ultimately to do a transaction and maybe teach you how to leverage other people's money and take one step closer to financial freedom. We do update our note platform on the website, Mobile Mailbox Money. Let's see if I could share my screen again real quick. If you haven't had the chance, our websites and businesses, Win Mobile Homes. Win Mobile Homes is the largest dealer of manufactured housing in Arizona, license 8670, and we turn renters into homeowners. We're the largest dealer, third-party dealer, I think, in the nation. I'm going to start saying that a lot more because I think it's true. That's self-proclaimed, but we do $5 million in business a year. We buy, sell, trade, list, and seller finance, as well as invest in manufactured housing currently in the Arizona market. I'd like to find another operator in another market, maybe Florida or California, and ultimately help them throw some gas on, how they're operating and just start to continue to build the portfolio. That's Win Mobile Homes. Win Mobile Homes is now offering a senior living component to our platform, which means we'll be offering a package, one payment, where an individual either rents or buys the house and they get care 3 times a week, 4-hour blocks from a certified nurse's assistant within their home, virtually running a assisted living equation. It's more independent living because it's not 24-hour care, but we save individuals, 50 to 80% given comparable assisted living monthly rentals. They could share a room in an establishment here in the valley for $3,500. For $3,000, they get their own room in a remodeled manufactured home with 3 visits per week from a certified nurse's assistant for them to distribute medication, for them to go to the grocery store, for them to have companionship, to monitor, or really maybe there's just an out-of-state family component that they're looking to have some peace of mind. With this component, they save $500 a month for their living. They'll have to pay for food, but outside of that, they get their own room. They don't have to share a room. They may not want to share a room. Those are all opportunities. Or for $3,500, they could have their own house in a institutionally owned, amenity-wide mobile home park here in the valley with these care services already lined up in a checkbox equation. That's across our 55 and older communities, from Camelback and 51st Ave, Ellsworth and Guadalupe. A lot of locations for these individuals to be able to facilitate where they're wanting to live at. And that's in Glendale and Mesa in most of our locations. Mobile Mail, or Silvercrest, is our accredited investor fund. It's a 506c Reg D accredited investor offering. And I have a position for you today. These positions after this meeting just got absorbed into the fund. And next week we'll likely roll out the pending transactions that hopefully will go pending this weekend. But in the fund, we get pref. I could take $50,000 to $500,000 and help that start earning interest in as little as 30 days. In our private credit strategy, buying notes from Win Mobile Homes, vertically integrated in that accord with all of our bells and whistles, 5 in management, 7 in sales, 15 in rehab, and now 30 positions currently performing in our portfolio. I give my investors a 10% return for a 1-year term paid monthly, 12% for a 3-year term paid quarterly, and an income-oriented investment strategy, investing like Warren Buffett. More curiosity to be cured. I got over 1,000 videos on YouTube, from artificially generated videos to me walking around the Masters talking about notes, to education, to podcasts, to masterminds, to interviews, to offering our private credit strategy to Asria. We are the main corporate sponsor of one of the largest real estate investment associations in the nation. That's Arizona Real Estate Investors Association. We'll be doing, when Jeff Watson comes in town, I think it's June, what is it? June 3rd at 6 o'clock at the Azria office. They'll get this up soon, but with Jeff Watson, private lending attorney, prolific private lending attorney, helping individuals earn income without tenants like the banks. So a couple meetings that are lined up that week. If you're in town, that's a must attend. Find that at the Azria website, Arizona Real Estate Investors Association, on their calendar. He'll also be at the meeting second Monday of every month, where we give a quick minute on what we have to offer with Azria. Super gems to be had. Follow my Facebook. I post a lot on Facebook. I do a lot of testing as far as videos and education and stuff like that, more artificially generated videos, and kind of people can stay up to date with what's developing as we conduct transactions. I posted this morning, and just off the top, lot 35 sold, lot 125 sold, lot 45 sold, and that was about 400,000 in transactions. So this is a real week-to-week view of how we operate, in the want for trust. People do business with the people they know, like, and trust. And hopefully we facilitate that here today. I'm going to put my number in the chat. As I do, if you have a burning desire, burning question, or really you're looking to game plan about capital you have coming in, there's my cell. That's in the chat at the end of the day. Listen, we do this all for you guys. I appreciate all the interaction. Come with questions, come with feedback, come with comments. Constructive criticism is important, and we're built to withstand. At the end of the day, we do $500,000, $600,000, $700,000 in notes a month. That's 5, 7, 10 transactions. And hopefully we can double that next year. Literally, that would be over 100 people that we've helped house in a 1-year program. That's like literally life-changing. That should be on the news. So catch us on the news someday soon. Hopefully so. We'll get Donald Trump to co-sign or send us a check for all of the good that we do. You never know. At the end of the day, you got to put it out there. So we appreciate each and every one of you being here today. I'll leave you with a video on how we help investors time travel, and please don't hesitate to reach out.
Alden, there are a couple of questions in the chat.
Oh, let's hear it.
Bernard says, good afternoon, everyone. I apologize for asking. I just joined the chat. Is this for whole note purchases, or can someone buy a partial?
So we don't sell partials, in the want to be careful in interpreting it as a security. At the end of the day, we do hypothecate notes. So for the full unpaid balance, an individual could participate for a 1-year term at still a double-digit interest rate. And the lowest positions we have at any given time are around 40,000. So, 40 to 100 is kind of the sweet spot, about 80,000. But we don't sell partials currently. That may change sometime in the future. But, we want to be careful when we're talking about the potential of a securitization of an asset.
You can always, if you want to do a partial, you can form an LLC with your own contacts and have partials that way through your establishing your own group. We do have people that do that.
Whether that's through a LLC or a trust, and you have the assigned beneficiaries, that's all high level strategy. That's not for the layman by any means. You don't do that with people you don't know. If you have your contacts and your business professionals and they're interested in taking place, and you guys are trying to figure out how to make that happen within your group, that's a conversation, right? Savvy investors that came together and are looking to capitalize and put their money together. You form a trust or an LLC, you assign beneficial interests or ownerships within the structure. You have an operating agreement, and you buy that note under that LLC.
Okay, there's one more. It says, good afternoon, Alden and Sunny. One of your properties has already been sold, so we're currently looking for another option in the Phoenix area.
Are you looking as a buyer of a mobile home, or are you looking as an investor, specifically in Phoenix?
San Estrella 116 is in Phoenix. That's the one that's 85,000 with 15,000 down. So it's a $70,000 note. That's the only one we have right now, I believe, that's actually in Phoenix.
That may be available. I'd need to know like today, if possible. So maybe if you could text me direct or something of that nature, if you're really interested, you know, I'm looking to do a deal at the end of the day. But just know, as this meeting does close out, we are making movement forward to acquire these positions. So it's important to speak up, and I appreciate you asking that question. Did we have any other questions today?
All I can see.
Those were all great ones. That's just, you know, top of mind. You know, you got to put it out there a little bit. Push your piece forward. You know, important to be compliant. You know, you don't want to get construed for a potential SEC violation. As Bernard brought White, appreciate you pointing that out. That's what I was talking about. You know, want to be careful with construing things as a security, you know, and having partial interests and things of that nature. So obviously super high level conversation today. I would encourage you to go back and view these and this online at our YouTube. It streams live. It should be live today. We'll likely send you an email with the update and the link for that. Please don't hesitate to reach out. That's one step closer to financial freedom. What do we call that? That's mobile mailbox money. Appreciate y'all being here. Have a great one. Bam.
They say nobody can time travel. But what I do helps people reclaim their time and live like the future version of themselves today. Instead of waiting years to build wealth, my investors receive pro forma cash flow from day one. They don't just invest, they become the bank. That means secured positions paying 10 to 14% interest, backed by high equity cushion, double underwritten assets, designed for long-term stability. And here's the best part. This isn't just about returns. It's about impact. Every position helps keep hardworking Americans and ITIN holders in their homes while creating new solutions for affordable housing. You're not just earning income, you're changing lives. So imagine this, you're traveling the world, enjoying retirement, living fully in the present, while the cash flow keeps coming in month after month, secured by real property. Because true financial freedom isn't about waiting decades. It's about collapsing time. It's about living your future now. Time travel with Silvercrest Opportunity Fund today.
So that's how we do it. That's another week with mobile mailbox money, Silvercrest Opportunity Fund, and Win Mobile Homes. Got one live viewer here, looks like on Facebook. Appreciate you being here today. wire ready opportunities, to say the least. Help us change another family's life today with your capital.